Yeah, I mean, there's a lot of insecurity right now in the market, especially regarding the development of artificial intelligence. How will AI change companies? How will AI change sectors? How far are software stocks going to fall furthermore? Or will there be mass employment in 1 or 2 years? I mean, many people have read the Citroën report over last weekend. And that uncertainty has led to a sell-off in certain parts of the equity markets. There are a lot of questions around how will company revenues and especially profits be impacted by artificial intelligence, and it's quite a difficult question. You have to look from, so we do not participate in this short-term sector rotation. Instead, we focus on the long-term challenges and the long-term impacts of AI on business models, especially on profits, earnings per share of companies, because this is what counts ultimately. The strongest sectors in the recent months have been, first of all, the value chain around artificial intelligence, infrastructure for AI. This is a theme we focus on, especially semiconductor producers, memory, DRAM producers, especially companies from South Korea, has helped the performance a lot. This is, in our opinion, one of the safest ways to benefit from AI. I'm especially talking about semiconductor companies, like GPU companies, like in NVIDIA, for example. We have been invested here for more than 10 years now in NVIDIA. And on top of that, what has helped a lot in the recent months are memory producers, especially from South Korea. On top of that, raw material exposure, especially in precious metals like gold, has contributed quite well to the portfolio performance. As you know, we hold a strategic position in gold, which has really helped to stabilize and enhance performance in the recent months. We look at risk, at portfolio risk, in a different way, like many people do. We do not look that much on volatility because I believe it's not a perfect measure to account for portfolio risks. What's most important, in my opinion, that you invest in the right companies that benefit from structural changes in the long run. To cope with that, I mean, we have a double-digit performance target of our global equity funds. And what we do is we invest in fast-growing companies, conservatively growing companies, stable growing companies, and slower growing companies. I believe the combination of these 3 buckets is basically the key to a healthy diversification in the portfolio. On top of that, we have a gold allocation of up to 10% that we are currently fully using, which further helps to diversify the portfolio structure. I believe most promising is, first of all, the raw material sector, especially the question about the sustainability and stability of fiat currencies, especially the euro and the US dollar, helps to bolster, helps to further drive valuations of gold and silver, for example. We replicate that in our portfolios as well. On top of that, there is an ongoing development in technology, especially artificial intelligence. Here, we are continuing to especially invest in the shovel producers of artificial intelligence, semiconductor companies, especially memory producers from South Korea. And third, I believe there's one of the largest opportunities over the next 5 to 10 years is Asia and emerging markets. Valuations are on multi-year lows. People talking about that we are on a 50-year low in terms of valuation. But in contrast to that, Asia is the fastest growing economic region. And currently, just to give you an example, China just represents 3% of the MSCI World All Country Index, even though it nearly represents 20% of global GDP, because Asia as a whole is currently the fastest growing geography overall. We're actively looking for tracking error. This is our core belief, how we are technically able to produce alpha for our customers. This is what our customers pay us for, and that strategy has admittedly worked out quite well over the last 13 years. With our fund, since the inception of the strategy, we were able to deliver a strong double-digit performance over that time frame in our more aggressive strategy, we were able to deliver 18% per year on average over that time frame. And I believe with our strategy to focus on those large structural growth trends over the next 5 to 10 years, I strongly believe that we are able to repeat these strong results from the past again, also looking forward on a 5 to 10 year time horizon.